It's yeah. Okay, so our next segment is the Trump report card. Donald Trump, now president almost for 4 weeks. A lot has happened. I cannot cover everything, of course. I don't think anybody can cover it in a few minutes. But let's talk about the impact on markets. I think most of you are familiar with the news. Everything that Trump does dominates the news. New U.S. president, of course, big country. And we'll focus, of course, on markets. So we had an erratic start to his presidency on January 20th. Lots of confusion. Something that Steve Bannon, here in the picture on the top, former editor of Breitbart, an extreme white supremacist, is actually running the government. I don't think so. I think many people have an impact. We have a calmer continuation, at least this week and also last week. Things are moving a bit slower. Less executive orders. Here is a nice meme of Trump showing his executive orders. And what changed this week is that Steve Mnuchin, not sure how to pronounce his name, he has been confirmed as Treasury Secretary. So we do have the number one person regarding the economy finally in charge. So maybe we'll get a clearer picture. Okay. Trump and the markets. What markets want from Trump and what the logic is based on. Basically, after the elections, they believed everything he said about fiscal stimulus. Fiscal stimulus means lower taxes and infrastructure spending, deficit spending. So with fiscal stimulus, you have a stronger economy, higher stocks, higher inflation, higher interest rates, and a strong dollar. This hasn't happened yet, but we had higher stocks and a strong dollar. So markets reacted. And markets believe that trade will continue flowing, perhaps with minor cosmetic changes, nothing too crazy. Okay. What happened so far? No fiscal stimulus plan has been shown. This was evident already in the press conference that he held before entering office, a few days before January 20th. He had this executive order to build the wall, so it's bad for relations with Mexico. So we had some of the trade issues that markets did not want to see. The meeting with Enrique Peña Nieto, the Mexican president, was canceled. The Muslim ban on 7 countries for their citizens to enter the United States, it backfired. It was rejected by the courts, and it caused a lot of political trouble. The Obamacare repeal and replace. So he signed an executive order about repealing Obamacare, but then nothing is happening. It'll probably maybe happen next year or something like that. Now it's sort of on the back burner. And the talk of deregulation, of dismantling Dodd-Frank or other things, this is certainly helping financial stocks. So we haven't seen real action yet, but markets are certainly moving. All in all, Trump's report card, I would say not so good. For markets, there are still worries about fiscal stimulus, worries about trade, some hope on deregulation. So maybe on that front, he can do more. And it hasn't worked too much. We have seen the dollar slide. Well, we have seen, at least this week. First of all, we've seen some calmer Trump. That means weighing less on the dollar, allowing for the natural correction to happen of the dollar sell-off from the beginning of the year. And of course, Yellen, the Federal Reserve, took the baton back in pushing the dollar higher. So at least temporarily, we're seeing monetary policy having more impact than politics. I don't think, which is what we've seen in the past few years, but politics had a stronger role in the past few months. I don't think it'll last too long. I think politics will make a difference once again. So what's next for the US dollar? The Donald and the dollar. If we'll have more of the same, too many political scandals, no fiscal stimulus, we can have a disappointment, which I think we're already beginning to see a disappointment from Trump by markets. But well, stock markets are still looking good. So we'll have a bigger fall in stock markets and the dollar before we reach 100 days, before the end of April, and an extension of the dollar reversal. If we'll have a calmer Trump, but no fiscal stimulus, we can have range trading as we wait. And if we have finally a fiscal stimulus plan from the new Treasury Secretary Steve Mnuchin, we could see perhaps the US dollar re-strengthen once again after the correction, also boosted, of course, by Janet Yellen, which we've seen this week, and it can move higher. So these are the three scenarios: more political trouble and trade wars and nothing going on. We could see a dollar sell-off. We could see stability if we have just a normal week in the White House, which is hard to find, and if we have what markets hoped for, a fiscal stimulus plan, a stronger US dollar.
Welcome to a market to end all markets. Welcome to FX Pro.